Hey guys, how's it going? Thank you so much for joining us today. Tyler won't be able to make it, unfortunately. So I see that we have Keith and Mark and Crypto Choreo up here, and we might as well go ahead and give it a start. Again, thank you for joining us, and welcome to another episode of Blockchain Banter, Trading Crypto. Keith, we've kind of made it a thing here. If you can start us off and tell us, I've been watching what's been going on, right? I see what's kind of been happening, but I'm curious where we kind of what you saw last week, what you're seeing now. I saw a couple of your recent tweets and I've been following along a little bit, but I want to hear it, from you, and I'm sure our listeners do also.
So in the I guess I don't even know what to call this place anymore. Is it Twitter or is it X? I'm going with Twix now because it's in between Twitter and X. We're in transition. The the too long didn't read version is the market is trying to shake you out. Um, we're seeing, and we talked about this a little bit last week. Um, I'm alongside all of the tools I'm using with the order book data and fire charts and the algos. I also use some technical indicators and the 21 moving average, and typically I'll look at the 21 week moving average. But for the first time in a long time, last week we were talking about the 21 week and the 21 month moving average being really, really closely correlated, like, just a few dollars apart. That's changed a little bit, but really we now have the 21 day, the 21 week, and the 21 month all in a really tight range of probably less than $100 between the three of them. So they're really serving as technical support in different time frames. And um, we've seen now for 8 consecutive days the 21 day moving average getting tested, and I've expected it to fall through. Really, if I can even back up to last week on the chart that you shared, um, I had said that the weekly candle was going to be forced to make a decision either above or below the trend line, and the weekly candle on Sunday um, opened just below the trend line, nosedive down further, and so everybody doesn't think that every decision I make is a perfect one. I'll be honest and tell you, I had a scalp positioned, took it, and quickly sold it because I thought things were going to go south, which they did. Had I held it, I would have been able to recover it for profit, but it was nominal. Um, Price really isn't going anywhere, and part of the reason for that is the lack of, there's just no volume. There's not a lot of participation happening in the market right now. So we reclaimed the trend line briefly on the daily time frame yesterday, and we've now lost it again. So price is really fighting at that level. We are above and below the 21 day moving average. As I mentioned earlier, this is the 8th consecutive day. That number right now is sitting at, and it's going to vary a little bit from exchange to exchange, but the 21 day is like 29,320, and price just dropped $10 below that. The 21 week is really the one that I want to see tested here. And that has now changed a bit. Let's see, we're at 28,658. So there's been a lot of talk over the past week or two that like the 28.5 range. There seemed to be a lot of sentiment for that. There's not a ton of liquidity in the books at that level. So I do expect it to be tested, and maybe a bit of an overshoot. The past 2 tests have gone straight to the line over the past couple of weeks, so I'm expecting that to happen. I still maintain, as I have for months and months and months, that we don't have a validated, verified bull market breakout until we get over the 100-week moving average. And if that happens, I wouldn't say that that's just a blanket statement. If it happens, then we're there. I would say, if we start seeing full weekly candles printing above that level, then we can evaluate if, how things look relative to everything else in context. I don't take one single signal or one single move out of context. You got to, put it in context with everything else. But I would consider that, I'd give that a long, hard look if we cleared that 100-week moving average and started printing full candles above it, for the breakout. We've yet to even come close to doing that at this point. So right now I'm looking for a test of the 21-week for support, and that's at mid 28s. I said last week that 28.3 was pretty much my line in the sand. There's a buy wall just below that, just sub 28K, so like 27.9. There's a buy wall, so that's where the liquidity is stacked at the moment. But I'm just not seeing a lot of we're not seeing a lot of volume at this point. So it's more chop, but I think we're chopping in it, downward and to the right at the moment. Now, there's no straight line, so we could, I expect that we're going to dance up and above and below this line here for a few days. But this is what the market tries to do. This is how the market tries to shake you out. Got to stick to your plan.
And this is
Well, sorry, Joe, I didn't mean to interrupt you.
no, go ahead. If you wanted to add something, please do.
Yeah, no, I just wanted to say that I've been paying attention very much to this uptrending support line that Keith is referring to. Even on our Discord call recently, anyone who was there would have heard me talk about it. And I was looking at the liquidity distribution, and the way I characterized it was indecisive. Like it doesn't seem like there's very little reason to be confident that we will see like an impulsive rally at this stage. But also it doesn't look like there's anything like especially like it doesn't look like there's going to be a catastrophic drop. I'm still sort of leaning bearish on it. I'm still expecting that if we do break support, that coming back down to sort of the 25K range, I think is like in all balance of probabilities is kind of what I'm expecting. There's a lot of confluence at that level. And if we break that support level, 20 is probably not too far behind.
I'm right there with you, Mark. Right.
Yeah.
I would echo that sentiment. And the reason that I don't feel like there's a ton of sentiment for that big breakdown just yet is there's literally almost no liquidity between here and not like there's a lot at 25K, but there's not much there. There's very little friction at this point. So that's why I think that we're still going to stay in this range a little bit longer. But like you said, like you're not expecting that big explosive move in either direction. Most of us aren't, and that's when it comes, when we least expect it, right?
Yeah, it's a fair point. But yeah, it'll be interesting to see how the week closes out, because on my weekly chart, we're like right at that intersection where the 21 SMA and the 21 EMA are both meeting the support line.
We're right on the right. I mean, it is right on the line at the moment on the weekly chart.
Right, exactly. And then so I moved back to daily just to kind of keep an eye on it. And it's been kind of disappointing to see that there's not too much volatility. Like, what would make me feel better right now is to see the price try to push down and to be supported, right? What I would really like to see is some of those wicks down and then the market basically stepping up and keeping the price up. But it hasn't really, like, there's nothing there to sort of suggest that we should be confident that liquidity is going to come in. But if we do start to see some of those wicks down and the price bounces back up, I think we can start feeling confident again.
For the sake of having different opinions here, I hate to agree wholeheartedly with you here, but I agree wholeheartedly with you here. It's kind of where we're at right now. Now, what I'm starting to contemplate, there's no question that liquidity has exited the building, right? There's money has gone someplace else, but
did you see the news about GSR just today?
But it ain't here, right? But what was that, Mark?
Did you see the news about GSR today?
No.
Yeah. So another one of the big crypto market makers is significantly shrinking, which is is never good news.
Right. And Prime Trust is filing for bankruptcy protection again. Yeah, that's it's never good to see that. So now I'm thinking back to my earlier days, 2017-ish, 2018-ish, when we saw so much volatility because there was not as much liquidity in the books, right? That's when we would see crazy 30% wicks.
Right.
I'm wondering if the net effect of what happens here is, do we continue to just stay compressed because price is being suppressed, or do we start seeing more explosive moves because of the lack of liquidity to dampen that volatility?
Yeah. And neither would surprise me. It would also not surprise me, by the way, if it just stays compressed and we kind of just move sideways out of this support region, right?
Right.
It reminds me a little bit of the that early 2020, just as the COVID, just as the Bitcoin price was recovering from the market crash due to COVID.
Right.
And you remember, right? Like the volatility was nothing and liquidity was super thin, and it just kept moving sideways for like weeks, right? It was you could almost hear the tension in the chart.
It is. It's like listening to paint dry. What's going on right now? Not watching it, but listening to it. It's tough.
So
it's tough, and traders and listen, for an investment strategy, that's one thing. For traders who are trying to day trade this, it becomes increasingly challenging. You've got to find assets that are moving that you can capitalize on, and for people who like the security and safety of Bitcoin relative to alts, that's a difficult play. So you're forced, if you're gonna attempt to day trade, you're forced to get creative and find other avenues, because Bitcoin ain't moving right now.
Absolutely. On my side, one of the things that I'm looking is the Bitcoin Volatility Index. And now there are a few of these indices, but there is one which is developed by CVI, Crypto Volatility Index. And this value is currently at 37. Now I'm looking at the chart, and this is the lowest value it has ever been since its inception, which was in April 2019. And so, and by the way, this is by very far the lowest value, because usually the low of this value was around 50, 55, and now currently it's at 37. So this is again confirming the really severe lack of volatility. There is another volatility index. This one developed by I'm looking at the Block website. Another one which is currently at the lowest values. And you can also see both on centralized exchanges and decentralized exchanges, the volumes are also very, very low. So this makes it very hard for traders. Usually this is the hardest environment for traders to trade. There is no real trend. There is a lot of stop losses being hit in both directions, both for bulls and bears. And yeah, it's also summertime, so usually during the summer the volumes are lower. But one of the things that I wanted to say is that one of the nice things about DeFi is that there are various types of protocols who allows you to do different stuff, and so you can, for example, trade volatility. You can bet on volatility, and for example, usually we talked about compression, and usually expansion follows compression. So you can say, okay, we are at the lowest values in terms of volatility, so I expect the volatility to increase in the next few months. And so there are assets that you can actually buy to bet on that, and even there are assets that you can independently of the direction. So if it will go down or up, you can bet on volatility, and you can make money just by being right on that. Now, of course, the timing also matters. So if you are, we might range for a few months, and usually the way these protocols work is that you pay a funding fee, the longer you hold your position. So just wanted to mention that this is one of the advantages of DeFi, is that it offers many services that do not rely directly on traders making profitable trades, but you can trade volatility, you can stake your positions, you can provide liquidity and make money, which is very, very nice.
That's good. I appreciate you sharing that, because people need to find alternatives to trading spot. So for those of us who are spot traders, we need to start. Well, probably a lot of people have already made that move, but a lot of spot traders are reluctant to make that move to DeFi, as we know. So this might be a good time to explore that.
Really quickly, I saw Sammy requested to speak. I tried to approve you. If you're still in the audience, it looked like you were connecting for a minute and unable to join us up here up on the stage, but we would love to have you if you have questions or comments to join us. So please request again. Crypto Choreo, you had unmuted right when I started. If you want to unmute and say where you were going to, please do.
Yeah, sure. So coming back to volatility, so one of the things that I usually do as a trader is, because I don't like to be in front of the charts all the time, so I put price alerts on TradingView. And I do that in what I call the sandwich mode, which is a method that I invented for myself, but that works well for me, is that I put a price alert above the current price, and I do that in a way that it's I put the price alerts in a certain place which I would consider a breakout. Now this can be either from a support or resistance. Usually that's how I do it, and then I do the same thing on the and I set a price alert on the lower side. So if the price pulls back to a certain area, again, which usually corresponds to a pullback to a support region. And this way, I set the price regions of interest for myself, and as soon as they are hit, I receive an alert, an email, and then I can look at what's going on and then decide to take a trade or not. And so usually I have multiple assets that for which I do this thing, and I do few alerts per week that gets triggered. But what's interesting about the lack of volatility recently is that I haven't been receiving any alerts with my method in the last probably 2-3 weeks, and I was actually kind of forced to reduce the band of my alerts, and still not getting really a lot of alerts. So yeah, nothing is moving in terms of especially large caps. And coming back to narratives, actually the narratives that have been performing well recently is the ones that have the least amount of liquidity and volume, and that have smaller, the projects with smaller caps that can easily move quite fast with just a bit of liquidity. And so if you look at the last, I'm looking at my narrative dashboard now, and if you look at the last 2 to 3 weeks, the best performing narrative has been GambleFi. But in my opinion, and with my observations, GambleFi, for example, is a narrative that does well, especially in times of very, very quiet markets where nothing else is happening. Again, this is mostly because most of these projects are low in market cap, and they do not require a lot of liquidity for prices to make spectacular moves, and then it grabs the attention of traders, etc. So
this kind of supports what I was mentioning before about in the mid-teens, when we saw the volatility on 10 tons of alts that just didn't have anything behind them, right? So it sounds like what you're seeing perform in the narrative is actually pretty weak projects, but because of the lack of liquidity in those projects, price moves through them, and that volatility is what's attracting traders.
Absolutely. That's what we are observing. And if you look at the projects, the DeFi blue chips, any project above 100 million in market cap, there is really not a lot of move independently of the narrative right now. And so all the attention of the traders, at least in DeFi, is towards these very smaller and smaller market cap projects with smaller and smaller market caps, which at least they can they have more volatility.
As an ultra conservative trader, it sounds to me that trading the volatility example, like you first mentioned in DeFi, versus keying in on small cap meaningless projects might be less risk. How do you assess or calculate that, Corio?
Yeah, I would say it's really very, very different styles of trading. So, for example, more conservative traders probably it's best for them not to trade at all at the moment because there is not a lot of movement and because you can be easily checked out and it's probably the best thing to do right now for traders is to actually do some kind of very conservative farming, on stable coins or on Bitcoin, Ethereum, or some blue chip assets, I would say. But I would say in terms of risk, we discussed about this probably 2-3 weeks ago. But my view is that you can do anything as long as you take care of your position size. And this is how myself I like to think about things and to take trades. So I'm not afraid of taking any kind of trades as degen as they can be, and very we can talk about shit coins and small caps that do not have fundamentals. But you have to know that these things can very easily go to zero in less than 1 day. So the position size really, really matters a lot if you want to do that as a style of trading.
Agree. Mark, in this environment, I imagine the grid bots can still be successful, but you have to tighten up your range considerably.
Yeah, absolutely. I think not even just tightening up your range considerably, but also monitoring your time horizons a lot more closely. So I think, as you've correctly pointed out, there are people who day trade literally for a living. And their weekly paycheck is effectively bottoming out now because the stuff that they're used to trading is no longer yielding anything. And so if you would be opening positions and closing positions kind of weekly or even daily for a lot of these altcoins, that they just move so quickly that you might actually have to nurse that position on the 4-hour chart. I even know people that are trading on like the 5-minute or even the 1-minute charts at times with some of these altcoins. So yeah, you're right. You do need to tighten up your ranges, but you also need to be a little bit more attentive when the market is that volatile compared to how some of these bigger tokens with more momentum and inertia behave.
And how in your testing, how does the grid setup perform in a chop like we're experiencing right now versus obviously when you're in up only mode, it's easy to make money.
Right.
How does it perform in your testing in a sideways chop?
Sideways chop is obviously good, but it's very volume dependent. Right. Like you just because you've got the your position at the right price doesn't necessarily mean you're going to find a buyer, even if the Binance chart says that you should have by now.
Right.
especially with the liquidity running pretty thin, sometimes the price moves in a very, let's say, disingenuous way. The I think the more important point is that when you're actually setting, when you're setting these levels, when you're deciding your spread as a trader, right? When you're actually going to be taking profit from a position that you're trading in something that actually does have a little bit more volatility than Bitcoin does, for example, right now.
Right.
What's if you have a look at the efficient frontier of it, like the risk adjusted returns, the winning strategy right now is to take returns earlier, like not have too much ambition, that you can scalp something as aggressively as you might have, and just basically, when you're in safety, when you're back in profit, it's probably time to at least recover your initial investment. That's really what's playing out right now.
Yeah, I've been saying that these are still very much sell the rip conditions, and it's not a time to be greedy and look for those big gains. All gains are good at this point.
Yeah, and nothing has any particular trend right now. Like it's when there's a very clear direction that the market is moving in. I think it's absolutely it's clever to take a slightly longer position and have confidence that you're going to reach certain price targets.
Right.
But yeah, this week and leading into next week, I think if you've got an ambitious price target, it's probably time to revise that strategy.
Yeah, and we're talking trading here, and the investment strategy is a different animal, and I think that everybody should have targets for what they feel is a good long-term investment target. And for some people, it might be anything sub 30K. For some people, it might be sub 20K or even 10K. Whatever it is, you need to identify that target. And so far, nothing has changed in terms of, we haven't received any confirmations that quite frankly take anything off the table downrange from here until we see that breakout move. So you need to have some conviction at what you think is an investment price that you're comfortable with. And if you're a long-term trader, if you believe in the future of these assets, then and you have a 5-10 year horizon, then really you should be okay wherever we are, from this range and lower, right? I mean, look at what Saylor does. He's not worried about scalping the bottom, right? He's got I'm not saying he has a great strategy, and I'm not saying that I would want him to trade for me or invest for me, but he's all in. He's all in at any price under 100K,
Right.
and he'll continue to buy that. And I imagine that once that if and when price clears 100K with conviction, and who knows when that is, that he'll probably continue to buy because he thinks it's $1 million asset. You need to do what's right for you, have that plan, and stick to that plan until, speaking to folks listening, have that plan and stick to that plan until you see a confirmation that something has changed.
It's also a good opportunity for people that do have a long term view on this, and to reflect on what that time horizon looks like. Like, do you think it's a decade before Bitcoin gets to 100K, 5 years, 2 years? And, for a lot of people in the industry right now, the vast majority of crypto holders are underwater. And a lot of people have made fairly decent gains, buying Bitcoin when it was just recently back, under 20K. and now here we are at 30. It's totally reasonable. Like, even if you are the world's most diehard Bitcoin maximalist, it's totally reasonable to secure, diversify back into fiat now if you want to, because like as Keith and I both said, there's about a coin flip chance that will come back to 25, and if we're at 25, I will say there's another coin flip chance that will come back to 20, and it's not a bad idea to risk off when the market is looking like this. Sure, like going back into fiat at least a little bit means that if if we do get an explosive move to the upside, you'll be disappointed. But you might be more disappointed if we get an explosive move to the downside.
Right.
And it's totally like, there's no points for loyalty to Bitcoin. It certainly, I would say, it even disrespects its loyalists. Yeah, it's a good time to be thinking about it, and it's giving you plenty of time to think it through and make a considered decision. And Bitcoin doesn't always give you that opportunity.
Yeah, I'm thinking that if we lose this range, then like you said, likely some bounce from 25 because there was some good consolidation at that level. But I things can change, and I'll reevaluate at that time. But at the moment, based on what I'm seeing in the order book right now, I would say that a recovery from 25, then a retest of 25. Who knows how many retests of 25 until that breaks down to 20. And that was a historical level. The 2017 top was just sub 20K, right? So obviously a lot of confluence, both technical and psychological resistance and support at that level. And if that breaks, then it really gets interesting. And I think it could. We have to see where we are in the world at that point. The order book will, we don't see anything there, but when price starts going in that direction, we start seeing the order book populate. There's still, for a long time, has been about 60 million stacked at 12K in the order book. And it's been there for probably close to a year.
Quick question. We're talking about approaching trades with a plan and sticking to that plan. Corio, I have a question for you. We've spoken in the past, and you can correct me if I'm wrong, about, you tend to lean more into fundamentals. With your latest, I pinned it to the top, and you were saying in the past 5 months, the best performing narratives have been the ones with almost non-existing fundamentals. Has your approach changed at all, or are you taking more that sort of risk off approach?
Yeah, I would say that my approach has certainly changed in the last, it changed once in 2022, and then it changed another time in 2023. And this is probably the most challenging part about trading, because you come up with something, you backtest it, it works, and you get some results, and you are happy with it, and you start applying it. But then as soon as, you do a few trades, the market conditions completely change, and what you are doing is no more profitable, or you don't get signals, or it becomes a losing strategy or something. And so you have to come up with something new. And so last year I was pretty conservative, and because of the bear market, and it worked out great. So I was mostly doing nothing at all. But then in this year, I became so much conservative in 2022 that I missed, let's say I missed on a lot of the pump that happened in the first quarter of this year. And so I said, okay, it's time to become more aggressive. And I benefited from some of the narratives that I myself am more comfortable with, that I understand better, like the the LSC narrative and these kind of things, that I know the projects, I know the fundamentals, I know how these protocols are driving revenue, I understand their tokenomics and the value that they bring. But then after Q1 2023, we started to see these meme coins, and so we had different narratives that, as you said, when looking in the last few months, we saw that the best performing narratives were in most part the memes, and more recently Telegram bots, and also GambleFi. Now, I wouldn't say that these have no fundamentals at all. Certainly, some people like Telegram bots because they provide some kind of better UI or a better way of benefiting from your trades, more automation, etc. And also the same thing could be said about GambleFi, which is that a lot of people anyway use this, gambling and casino and sport betting protocols outside crypto. It's a pretty big industry. Sport betting is pretty big. Casino and all this kind of stuff are also pretty big. And there are actually values of bringing these things on chain, because you get more transparency about, the randomness. For example, you can understand how these things work, because there are some challenges in the Web2 alternatives that can be solved in Web3. So it's hard to say that. I wouldn't say they have no fundamentals at all, but at least I realized that I was too conservative maybe with with my choices of the narratives, and then at some point they were becoming not very profitable, and because I spend a lot of time in this industry, my goal is to be able to outperform, and because otherwise I just hold stake ETH, and it's pretty good in the long term, but because I'm pretty active and I'm looking into the trends, my goal is to see how can I outperform. And so the answer is really not easy, because things keep changing, and as soon as you come up with something, then market conditions change. But I would say it's really important to come up with a very defined risk profile for yourself, and stick to it. And be able to reassess when necessary. So these are my learnings, I would say, from the last 2 years of trading, I would say.
And okay, so I was going to ask you, when you said more aggressive, in what sense, but you're speaking specifically to your choice in narratives, not necessarily like you're sticking to, it's all about how much you're willing to risk and put into a specific narrative that you're going to be trading.
Yeah, so absolutely. So it's about the assets that you're buying, to be very, very specific. So if I'm conservative, I can buy Ethereum, I can buy Curve, I can buy Convex, and I'm very, very comfortable with holding these assets. I can sleep for 3 weeks without even looking at the charts, and I know that okay, they might go down a bit, but then they will probably not try and go to zero. And this is something that I'm very comfortable holding for long term. But on the other side, the upside potential might be more limited. So when you want to rotate to more, let's say, more risky assets, assets that are either they don't have fundamentals, or weaker fundamentals, or when you look at the business model, the revenue that they generate is not as strong, or for example, they incentivize a lot of their users with with a lot of inflation of their token, and that it's not healthy, but it's still a trend, right? All of these things, for example, Unibot from the Telegram, it has a at some point, I haven't checked the last numbers, but at some point there was a 10% buy tax and 10% sell tax. So obviously this is something that is if you come from a conservative trading approach or view, this is not something that you would be comfortable with, but it's also the asset that performed the best. So I would say you have to really be comfortable with what you're trading, and also understand all the risk in terms of okay, if I'm moving to that lower cap assets or to these projects with less fundamentals or less fundamentals, then okay, maybe I don't want to hold them long term. Maybe how should I trade them? Maybe I should put a stop loss if I'm a centralized exchange. Maybe I should really change my position size and go with a much smaller position sizes. Maybe as soon as there is some pump, I will sell. And so it's a complete different way of trading, I would say. And it has its own challenges. But yeah, you really have to adapt to the assets that you're trading. For example, we discussed also about with Keith last time about leverage and Bitcoin. And I said that I don't like leverage in general. But I would say, for example, if you want to stick to Bitcoin and just trading Bitcoin, and by the way, there are a lot of people doing that. Maybe Keith also does that. I don't know. Because there is a lot of liquidity, and because the volatility of Bitcoin is pretty narrow, right? In general, I mean, you don't expect Bitcoin to do 30%, 40% moves in a day or even in a week usually. Whereas a lot of these other smaller caps can do some of these moves. So this means that you can also maybe take leverage positions on Bitcoin. You know, maybe a 2x, 3x, 4x, 5x is pretty manageable in terms of having a trading strategy with leverage on Bitcoin to a certain extent. If you understand what you're doing, I think it's also very doable. So it's a choice, I would say, also, when you're trading, for example, alts, now there is a wide range of alts from what we call nano caps, under 5 million, to smaller caps, mid caps, large caps. What you're actually doing is kind of trading Bitcoin with volatility, especially if we look at the assets that are above 10 million, because everything is correlated to Bitcoin and Ethereum, and so they move really in the same way. And you can, by the way, look at the correlation. It's usually very, very high between all the crypto assets most of the time. And so then it's the choice of, you can say, okay, I don't want to bother with all these narratives, all these ever-changing projects, fundamentals, or all these things. And I just want to save myself a lot of time by just trading Bitcoin. I think this is a very, very good and viable approach. And I would encourage, by the way, all the beginners to start with that. And this is also something that at some point in my journey I did for 2 months. I just traded Bitcoin and nothing else, because when you trade Bitcoin, actually you save yourself a lot of headache, because you don't need to worry about a rug pull, you don't need to worry about protocol risks, smart contract risks, about crazy volatility, about a founder that does something, about an exploit or something. So there is much less to worry about. Of course, yes, the volatility is less, but as I said, you can, for example, take leverage positions, etc. And so it's a spectrum, and when you move in this spectrum, then you have to adapt your strategies. So, for example, when you're trading Matic, let's say, which is small, still a very established project, Europe is as the same as in terms of volatility. It's the same way as, for example, trading Bitcoin with a 2 to 3x leverage. You almost get the same results in terms of volatility. And so if you move to smaller cap projects, something like, I don't know, like Convex, for example, then this leverage increases, and the lower you go in terms of market cap, the higher the leverage. So then it becomes a choice of, do I want to trade a very blue chip asset with leverage, or do I want to, not use leverage and use these other smaller cap projects, which then have a lot of risks and rug pulls, etc.
If I can piggyback on that, one, as a point of clarification, I don't use leverage, and for anybody new coming in or attempting to trade leverage, I would say go very, very slow. Proceed with caution. What I think gets a lot of people is you see so many people on online posting huge gains on crazy amounts of leverage, and none of them post what they lost, right? None of them post them getting liquidated. They only post their gains. So if you're going to trade that way, start very, very small and have modest targets, especially in this market. Have conservative targets. If I were trading leverage, I would not go very high. I wouldn't do 25x, 50x, 100x. That to me is just insane. But I would still be looking at conservative targets, take them quick, and take the money and run, and compound that into your next trade. I do also agree with what Corio said about limiting yourself to specific assets. I am not exclusively focused on Bitcoin, but I'm very focused on Bitcoin, and that's what I look at the most. And by doing so, and it doesn't have to be Bitcoin for you. I happen to agree with Corio that that's the safest asset to trade. You know, there's no Chad founder flying around in a private jet by himself in, you know, full Louis Vuitton garb. So you don't have to deal with any of that. And this will be a long-term asset that hopefully we can all capitalize on in years to come. But if you focus on, you know, on a specific asset or a handful of assets that you have confidence in, you like the project, and you study them, the longer you look at them, the more you can understand how they behave and how they trade. And that's probably something that has served me the best as a trader, is not trying to look through 1,000 coins every day to see which one that I've never heard of might meet what looks like a technical setup, but to focus on a handful of coins that I'm familiar with how they move. Sure, every once in a while you get a pop in one direction or the other that you didn't expect. That's trading, but for the most part, when you familiar, they all trade differently, right? Everything, you know, we could say, well, everything moves together with the market. Well, that's to a degree, but what happens, you know, within that asset and how it trades, like, it's not like everything moves the same percentage point. So understanding how that particular asset trades can benefit you and help you pick better targets. There was a time of years ago when I was trading on Binance and I was very focused on BNB. Right, you for those that trade on Binance, the BNB token would save us a lot on trading fees if we use that to pay for our fees. And so I was initially just trading it for that, but I got to where I could scalp it with such consistency that it ended up being probably my biggest moneymaker to date. Now that I'm not on Binance, I don't deal with it anymore, and I don't think it really behaves the same way that it used to. But by studying that one asset and seeing how it moved, I found it very easy to pick targets and scalp that asset, and that's exactly what I do with Bitcoin.
Really quickly, I have a question for Corio, and I want to go back to the sort of narratives discussion because I noticed a change in one of our original calls. I think one of the first calls, Tyler, if I'm not mistaken, and maybe myself even, I was curious, asked about timeframes, and we had spoken about time horizon earlier, and I saw you had tweeted that the social token narrative lasted 2 days. And you were saying it kind of depends on the sort of market conditions. If we're in a bear, you notice that they tend to last a lot, if we're in a bull, they tend to last a lot longer, right? Do you see these narratives lasting as short as 2 days, or was this kind of a one-off?
Yeah, so this specific one was probably, you know, a bit of a joke because it wasn't really a narrative, but it got a lot of attention because again, because nothing is moving, because you know, there is a very, very little volatility, and people are looking for the new thing for any new project. then this friend tech thing got a lot of attention initially, and and I did a Dune dashboard about it, and then it was the weekend where I saw a very significant drop in volume. But then I thought, okay, maybe it's the weekend, and usually you get less volume in the weekend, so let's wait a few days. And then I looked yesterday, and I looked today, and it wasn't picking up. So again, this is something that people try initially. They say they see maybe some people profit, and they post it on Twitter, and then it incentivizes others to try it because they think, okay, maybe this is the new big thing. But then usually, because they are not driven by any kind of real utility, people, as soon as there are some losses, people realize, okay, this is not going to do very well, and then everybody stops using them, and that's how the narratives are actually, if you can call them narratives, are getting shorter and shorter. And so, yeah, this is an observation also in the last 3 months that usually, we have seen a lot of launches, a lot of, and this is, by the way, also on the ecosystems. For example, I recently did another dashboard on ecosystems, and there has been a number of launches on new layer 2s, more specifically layer 2s, rollups, but also some layer 1s. But you can see that, of course, there are, for example, Base is one of the layer 2s that has been seeing a lot of growth in TVL, but there are not a lot of projects who are doing really well, and so it's a lot of copycats. It's a lot of just very, very short-term launches, just from projects who are trying to actually get some liquidity for themselves, and some very decent traders who are trying to be very early on them and make some profit, and but the cycles are actually lasting less and less. So this is something that we saw on Base. This is something that we saw on ZK Sync, and now since the Optimism OP stack, we are seeing also we are seeing more and more layer 2s launching on their own using the OP stack, which also creates some kind of very, very short-term momentum for these new chains of launching some new projects. And then again, because it's not really something that has been built over the long term, there are some very short-term profits, and then things die off. So yes, there is more and more launches lasting a shorter and shorter amount of time, with actually traders being the losers here, because the founders of these projects, who are mostly anon, are making some money because they are just is money out of thin air. And so some of the insiders initially make some money, and they post that on Twitter, and then you and me and others, they go and buy them, but we are exit liquidity, and the thing lasts 2 days or 1 day, or even sometimes a few hours.
Mm-hmm. Yep. Sorry, no, go ahead. There was one recently that you had made me think of, and I think it lasted about 4 hours. Was one.
Yeah. So there are some launches who literally last less than 1 hour or 2 hours. This project launched, one influencer talks about it on Twitter, some people buy, and then they rug pull. So you have to be very careful. It's an environment where there is a lot of risks, and so either you should not do anything and just wait for better market conditions, or you should really understand what you're doing and adapt your risk management and your position size accordingly.
Yeah, we have about 5 minutes left. Mark, I see your hand is up if you wanted to add.
Yeah, I can keep it relatively short. There is everything Corio is saying is extremely well informed. There is a French project that I'd like to bring everyone's attention to called Bubble Maps. And Jen, I sent you a tweet on Telegram. I'm not sure if you're able to pin that, but I highly recommend people get acquainted with this app. What it's designed to do is it essentially looks through all of the wallets that are currently holding a certain token, and it's the motivation is to map what would be considered, I guess, collusion between different wallets. And so you can use this to if you are okay, speaking to the conversation that we're having before about like why Bitcoin is generally considered to be pretty resistant to collusion, is because there are so many different market participants. Now, that does get corroded a little bit when we see big players like Jump and like GSR leaving the market, but still, like it's very, very difficult to mess with the price of an asset that is as distributed as BTC is. So that distribution level is extremely important, but it's also very opaque, right? Bitcoin, because it started out kind of obscure, and because it's such an old token, just by virtue of those facts, has become quite well distributed. And if you are trying to trade volatility, which you can't really do on Bitcoin right now, you might be tempted to go and find volatility elsewhere. But it's important to, I think, be informed of what is like true volatility and what is potentially strong manipulation. And so, yeah, like these rug pull projects, the only reason why they work is because the overwhelming majority of the token supply is controlled by only a few individuals, sometimes one individual. And the bubble maps actually helps to expose that kind of data. So you might find a chart and think, oh, that's exactly the type of market I'm comfortable operating in. But then you can check the bubble map and be like, oh, it's just one person trading against himself. In which case, this is obvious bait, and I probably shouldn't enter into that specific market. So learn to use the app. It's one of the best. Like it's such a shame that it's that it's not more front and center. I think everyone trading crypto should be using bubble maps all the time when they're sort of venturing into these more exotic assets. So information's your friend. Use Corio's dashboard. Use the fire charts from Keith. But also have a look around for like other sources of information that can not necessarily assist you in how you should trade, but whether or not you should trade at all. And I think Bubble Maps is a really terrific resource. Everyone should be using it.
That's really cool. Thanks for sharing that with us. I'm going to check it out.
And I did pin those to the top also. So everything that we've talked about, I've done my best to pin it all to the top. I hope everybody was able to see those throughout the call. Definitely go ahead and give Crypto Corio and Keith and Material Indicators and Mark and Bancor and Carbon a follow if you want to stay up to date on signals and narratives and automated trading strategies and all of the above. If anybody has any questions, my DMs are always open. We have another Blockchain Banter tomorrow. This is going to be our unpopular opinions, our DeFi debates and hot takes. So I hope everybody is able to join us tomorrow. Thank you guys so much for joining me today up here, and thank you to all of our listeners.
Hey, thanks for having us as always. And I know we're out of time. I just want to, we've been very bearish during this whole call, and I just want to give just one glimmer. And that is, yes, we are seeing price erode, and it is eroding down towards, what is deemed as pretty strong technical support. We do still see momentum on some of our algos is still pointing up, which and since, as we discussed at the beginning of the call, since we don't see a lot of liquidity below this breakdown level, that leads me to believe that we're not there yet. Doesn't lead me to believe that it's not going to happen eventually, but I don't think it's going to happen as soon as a lot of people think. Could be wrong, but just know that there's no straight lines, and we could continue to range until that happens.
Amazing. Thank you so much, Keith. Thank you guys all again. I hope you all have a good day, and we'll see you guys next week.
All right. Thanks, Jen. Great job as always.
Thank you.
Thank you. Thanks for having me.
Thank you, everyone.